and welcome to Hilltop Wealth Advisors Economic and Market Update for the first quarter of 2021. I'm David Wise, and with me today is Ben Yeager. Ben, thanks for joining me.
Absolutely. Glad to be here.
Awesome. Well, Ben, let's just jump right in. I think we can all say that 2020 is the year we'd love to forget. We experienced a pandemic, recession, social unrest, hurricanes, murder hornets. The Tiger King came out, and to top it all off, we had a very contentious election that just dragged on and on and on. But somehow, the markets remained resilient throughout. So, Ben, if you could talk about how we kind of got to this point, I'm going to recap last year, that'd be great to start.
Yeah, certainly. And so heading into 2020, there were several signs that the U.S. was in the late stages of the business cycle, and odds of recession we felt were pretty high. U.S. stocks were a bit pricey at that point in time after a decade-long recovery. So we had taken some measures to reduce risk in our models heading into 2020. But of course, we had no idea that a pandemic would be the primary cause of the next worldwide recession. Equity markets across the globe dropped significantly in the first quarter, and the pandemic's unknowns really weighed on the entire globe, including the markets. However, the combination of enormous stimulus package from the U.S. government, swift action from the Fed, and news of promising treatments led to a big recovery in the second quarter, and that largely continued throughout the year.
Yeah, and I feel like right as we felt like we're getting our heads above water, we remembered that there was an election in November, and the market was a little volatile leading up to that, but soon after, we got that vaccine announcement, and from there, the market rallied, and that's where most of the gains were made in the last 2 months of the year. So with that being said, clients are asking, well, where do we go from here? What's our outlook for 2021? Maybe you can expound upon that then.
Well, so far 2021 is mostly a continuation of 2020 and off to a little bit of a rocky start. We've seen, social and political unrest and even some unique market events as Reddit users have somehow gotten the whole world talking about what a short squeeze is. But despite all of this, the markets have continued to be resilient as well so far this year. And overall, we recognize that valuations are a little high in a few particular areas. But we are optimistic about where the economy is headed right now, and that likely will drive what's next for the year.
Yeah, and so with that being said, where are we seeing the opportunities in the market landscape?
Well, from an economic perspective, we feel like we're in a reflationary environment, meaning that inflation really dropped as we went into the recession in 2020. It was fairly low even before that, but we're going to start to grow out of that as we likely have another stimulus package and as the Fed continues to be stimulative, but also as consumers who have higher money market accounts than overall on average than we've seen in a long time. And as well, lower debt ratios today than they've had in a long time. So the potential for consumers who are a large part of the economy to get out there and drive a rebound in the third quarter and fourth quarters of this year is very much there. And so with a reflationary environment, we likely will see small cap stocks outperform. They tend to do well during early stages of recoveries. Value stocks are positioned well, trading at much better prices than growth stocks at this point in time. And then also with the government stimulus, there could be a currency impact there where we could see the dollar continue to decline as it has the last couple of months into 2021. And that creates some opportunities in international stocks. There may be other opportunities, but at this point in time, those are the primary areas, in addition to maybe a few sectors that are tied to the recovery and consumers getting out, like travel and leisure, as well as energy stocks.
Yeah, those are all good points.
So with all these opportunities, we got to balance it out, right? So what are these risks that we need to be mindful of as we go into 2020?
Yeah, we feel that the recovery comes down to two main issues that need to be solved, and really two sides of the same coin concerning the vaccine rollout. So the first being buzzword you're going to hear is the immunity gap. We got to close the immunity gap, which is the percentage of the population that has gained immunity to the virus. And we've already hit a few speed bumps in the vaccine distribution, with some states being far ahead of others. But naturally, we're going to build some efficiencies as we go on. And we just heard that Pfizer announced that they are committing to bring 200 million vaccine doses to the U.S. by May. And the last we checked, there's 330 million people in the United States. So that's a very positive sign that we're heading in the right direction. It'll also be important for other companies to get their vaccines approved. And the next one on the docket is Johnson & Johnson, which we could hear any day now get that emergency approval. So we're keeping an eye on that, as well as these other variants that are out there that you hear on the news, which could throw a wrench into this recovery and us getting to this immunity as a whole. The other side of the coin is the reluctancy gap. There is a subset of the population that are a little hesitant to go get this vaccine, especially when it becomes available to them. And that means they're not going to jump at getting back to doing economic spurring activities like shopping and dining out and traveling, all those trips that people didn't get to take last year. So we are hopeful, though, that as we get further along this into the summer, and those folks that are hesitant, see the people around them getting vaccinated and being fine and not seeing these side effects that are scary to think about, that we'll start heading in the right direction and close that gap as well. So those are the two keys to really where the economy and this recovery and where the market goes from here. Those are the two things we're most concerned about. There are other risks, of course, as always. So some on our radar are just the sheer amount of U.S. debt that is on the books. We had a debt issue before 2020, and this has only exacerbated it with all the stimulus packages to kind of bridge us to this recovery. And also higher taxes, which are likely to come eventually, maybe not in the next year or so, but down the road, we got to combat all this debt that we are building, which would be detrimental to some of those larger corporations. And then last but not least, negotiations with China, our foreign trade partners, how the new administration is going to deal with that and what impact that will have on the economy at large. Ben, with all of those risks kind of in the forefront and kind of all around us, how are we managing the market environment? What are we telling clients?
Well, yeah, so I think it's important to understand and know that there will be bumps in the road. It's very uncommon that any one year is just straight up and there are no drops. So we expect some volatility throughout the year, and we understand that as much as we'd love to, we're not going to be able to control the market's direction, but we want to focus on what we can control, and having a sound strategy and staying disciplined with that strategy has shown to work very well. It worked well in 2020, and we believe it will continue to serve us well. A very well-known and well-quoted investor, Warren Buffett, said, we don't have to be smarter than the rest. You just have to be more disciplined than the rest. And so discipline is a big part of what we want to practice going forward. There'll be lots of news lines and media and news stories, but the important thing is that we can sort of look through that, understand the strategy, and if adjustments need to be made, we make those based on the facts and the understanding of where things are going in the long run, and we maintain our discipline throughout the year. And so we're excited about where things are headed. We understand there will be volatility, and there are some positions that we think are ripe for opportunities, small cap stocks, internationals, and particularly energy companies. There are a few areas that pose some additional risk, large cap growth, and so on, that we want to adjust to, and we're adjusting in our models here recently. So that's where we're at, and that's sort of what we've been doing.
Yeah, all great points. I think we're running out of time here, so I want to thank you, Ben, and I want to thank all of you for watching. Also, special thanks goes out to the essential workers out there that are on the front lines, working those long hours away from their families. We salute you. We thank you. We hope that everybody enjoyed this and learned a little something along the way. We're always happy to talk with you. And if you'd like to learn more about Hilltop and our team, you can always go and check out our new website, which we just rolled out, and visit the Hilltop Views blog, We'll see you next time, and take care.